Bring in Oliver Sloup. He's with Blue Line Futures in Chicago. We had some overnight export sales news related to corn. It was a big sale, over 1 million tons to China, but it was for new crop, and then they canceled about 280,000 tons of old crop corn. Still a net gain, but the corn market didn't seem to react at all to that. So what's behind this?
Well, I think a lot of the weakness that we saw really from the Sunday night open was derived from the weather that we saw throughout the Midwest and some of the forecasts looking 1 to 2 weeks out, which look relatively favorable. And that's why you're seeing the new crop under a little bit more pressure here, not just in corn, but soybeans as well. On top of that, you add in the fact that we have a USD report out on Wednesday, and you probably got a little bit of position squaring ahead of that after such a nice run in these markets. So some profit taking. I wouldn't be surprised to see that continue into that Wednesday report. And when you look at the chart, I mean, we're pretty wide ranges here this morning for corn and soybeans, but it looks like just a blip because of the sharp rise that we've seen. So with the sharp rise, you can expect to see sharp pullbacks. This corn market could theoretically, pull back 40 cents and still be in a very strong uptrend. So we expect the volatility to continue into the report and post-report with a lot of attention focusing on weather going forward.
Are you hearing more people talking about being a little more aggressive when it comes to marketing their wheat now, given the fact that, it had a little bit harder time making new contract highs than what corn and soybeans did lately, and now you have this big sell-off today?
Yeah, absolutely. And we came within a stone's throw of the contract highs on Friday. Weren't able to really get the momentum. And I think wheat has really just been trying to hang on to the coattails of corn and soybeans. And obviously, you're seeing weakness in corn and beans here this morning. And that's prompting a little bit of selling pressure in wheat. And we wouldn't be surprised to see that continue. If we break and close below this 730 level for that July contract, Chicago wheat contract, I wouldn't be surprised to see that accelerate some of the selling pressure and take us back towards that psychologically significant $7 handle. So yeah, I would expect producers to be getting a little bit more aggressive at these historically lofty prices.
We'll come back and analyze the movement in our livestock trade with Oliver Sloup when we come back after this.